Today's video, I'm gonna show you guys how to find an intraday profit target with a 75 to 90% chance of being hit on a daily basis. Now, for this example, we're gonna be talking about floor trader pivots. If you're using the NinjaTrader platform, you can just simply right click on the chart, go down to where it says indicators, and then we're gonna go ahead and scroll on down right here to where it says pivots. Double click on that, and now you have the pivot indicator on your chart. Now, there's a couple lines that we're gonna actually see. You're gonna see that we have the P point or the pivot point. We have R1, R2, R3, which are resistance 1, resistance 2, and resistance 3. To the downside, we have S1, S2, S3, which is gonna be support 1, support 2, and support 3. So what I'm about to tell you guys, you need to sit down because this is gonna be so stupid simple. Your mind's gonna say, and you're not gonna believe it's actually true. But just to show you guys real quick that I'm not making this up, before we actually go through and backtest this on a few days worth of data, let's take a look at what AI has to say. The main pivot point has a 75 to 90% chance of being hit on an intraday basis. And I'm going to show you guys that actually holds up in the testing I've just done. In my past testing though, I got to tell you, it's normally going to be in the high 60 percentile, 68, 69, 67, somewhere in that ballpark. But I went ahead and ran through a simulation real quick. Now, what I did for this is I went ahead and went to data series. I added 40 days worth of data. However, when we scroll down here real quick, I'm not going to be able to see what the pivot point was on the first couple of days. And since when I added the data, it's going for by calendar days. We have weekends. We're going to get about 26 days. And I'm going to show you guys how accurate this target actually is. So now, before we go ahead and jump into the back testing, I want to let you guys know right now, My Fun and Futures is having a pass one, get one sale. So if you pass an evaluation, you get an evaluation for free. This is good for the starter plus and the expert plans. And to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Let's start off real quick. And we're going to start off on May 16th. Why? Because that's the first day as I'm scrolling back where I can actually get the pivot on the chart. Now, what I'm looking for with the pivot is I'm just looking for somehow, some way during the day that the market's going to come back and test it. What do we see right out of the gate? The market never hits the pivot. Mike, you said this was going to be a high probability target. Yes, but nothing is going to be 100%. There are going to be times where it's simply not hit. But let's go ahead and keep the counter on real quick. And just so we know where we started at, we're just going to mark the chart with the oval. So we know this one has already been taken place. I'm going to write down on a separate sheet the loss. All right. So we have one loss. Now let's go over to the next day. Next day, here's the P point. So what do? We gap down. We did not hit that P point originally, but then ultimately we come back and hit the P point. We scroll to the next day. What do we see? The P point is hit. We scroll to the next day. And believe it or not, I'm actually going to count this as another L because we did not hit the P point. We missed it by one measly tick. Now, I do like to front run my targets, but we got to be consistent with this. All right. So we're going to write this off as the P point was not hit. Let's go over and look at the following day. Following day, P point was tested right there. Now, what I really like about this is going into the New York session, we get that flush down. So if you could catch the turn, that could be one of your runner targets out there for the day. We look at the following day. Here's the P point tested. We look at the next day, P point tested. We look at the next day, the P point is tested. We look at the following day, P point is tested. We look at the next day, P point has been tested. We look at the next day, and you can see, well, we come up with another situation where the P point has not been tested. Let's go ahead and scroll to the following day. P point has been tested. The next day, the P point has been tested. The next day, oh, we have another day where we did not hit the P point. So that's going to bring us to 4 total days at this point in time. Let's go ahead and continue to scroll. P point definitely hit on that day. P point was hit on this day right down here. P point was not hit on June 9th. So now we have 5 times where the P point has not been tested. We can see right here, P point has been tested. Again, the P point has been tested. Once again, the P point was tested. Then we look right here, the P point was tested. Right here, the P point was tested. Now this was a good because we had a big gap down, whoop, right back up. Just to put this in perspective, you started scaling in this with some micros, that micro target could have been good for 34 points. We go and look at the next day, the P point has been tested. The next day, the P point was tested. and we actually missed the P point right there. So that's going to give us number 6, right? Next day, we get another, next day, P point is tested. Next day, the P point is tested, and it's still to be determined if this P point is going to be tested. I got to tell you, we are quite far away from that at this moment, but let's go ahead and count up the days real quick. All right. So we've had 1, 2, 3, 4, 5, 6 times where the P point wasn't tested. We count the days: 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 day, 10 day, 11 day, 12 day, 13 day, 14 day, 15 day, 16 day, 17 day, 18 day, 19 day, 20 day, 21, 22, 23, 24, 25, 26, and 27. So we had 27 days. Now, if we go ahead and we pull up the handy dandy calculator real quick, we go ahead and say 6 divided by 27. Then we go ahead and minus 1 from that. That's going to be a 77.7% accuracy that the P point is going to get hit on a daily basis. So why is that good, useful information? Well, one, I wouldn't say necessarily to use it as a primary target. However, if you have a reason to get into a trade and we see that the P point has not been hit yet that day, does it or does it not make logical sense to go ahead and push runners out for an extended target where we know that target by our own back testing has a 77% chance of being tested? Now, I deleted the first iteration of ChatGPT, but if we go back and see what ChatGPT says, it actually says for the S&P 500, 65 to 75% of the time, which if you guys remember earlier in the video, I told you for my testing, it usually falls between 67 and 69%. So right now, this test sample that we did is just outside of the high side. If we look at what ChatGPT previously said though, it did say a much higher reading, but nonetheless, 65, 75, 85, regardless, it still is a very high probability target that it will get hit. So if you're a trader that likes to play runners, now you have a new target location where you can place your targets at.